Hey everyone, welcome to this week's Startup News Roundup, your fast track update on what's happening in India's startup ecosystem. Whether you're an entrepreneur building your next venture, an investor scouting opportunity, or a management student keen to connect theory to real business stories, this video is for you. We'll cover some major startup headlines in week 48. So, dig in to what's going on and pull out management lessons you can actually use. So, grab a seat and let's dive in. First, Finance Minister Sitharaman holds separate pre-budget meeting with startups for the first time. For the first time, Union Finance Minister Nirmala Sitharaman on Tuesday, November 18th, held a separate meeting with startup founders and representatives as part of her pre-budget consultations. The meeting, part of preparation for the Union Budget 2026-27, marks a significant change in how the government is engaging with India's fast-growing innovation economy. The session saw participation from representatives of Teal India, eVidyaloka, Boat, Miko, Dalchini Technologies, IIMK Live, 100% Nourishment, Gaja Capital, and Draft Spotting Technologies, among others. The standalone consultation with startups indicates a deeper recognition of the sector's influences on jobs, innovation, exports, and digital public infrastructure. With the 2026-27 budget expected to signal the government's priorities for the next decade of India's digital and entrepreneurial growth, the policy inputs from founders could play a pivotal role. If we examine the startup scenario of India currently, it is pertinent that we speculate what are the biggest asks from the startups of India to the current government and particularly with the Finance Ministry. Let's look at some of the important asks or requirements of the startups in India from the government. Rational and predictable tax regime for startups and ESOPs. The biggest ask from any industry, and especially for startups, would be a rational and predictable tax regime. For startups, this would include taxation on ESOPs too. The first requirement for the government to ease business and grow startups would be abolish or permanently suspend angel tax in all practical forms. Defer ESOP taxation to the point of sale, not at the time of exercise. Provide minimum 5 to 7 years of tax stability for newly incorporated startups. These steps are crucial as unpredictable taxation hurts early stage fundraising, talent retention, and valuation. ESOP taxation at exercise discourages employees from joining startups. For founders, capital efficiency matters more than margins in the first 5 to 8 years. The impact of such a policy step would lead to better talent attraction, higher domestic angel participation, less founder time wasted on tax litigation, and stronger startup survival rates. Easier access to capital through credit, guarantees, and fund of funds 2.0. The second request from the startup community would be to ease movement of capital by expanding startup credit and launching guarantee schemes for revenue stage startups. As it has been doing for manufacturing, the government should launch a fund of funds 2.0 focused on deep tech, hardware, climate tech, and health tech, and allocate a substantial amount to these sectors. This would be different from a PLI scheme, as government funding for startups is typically an upfront grant or loan to support early stage activities, while a PLI or production linked incentive scheme is a performance based incentive provided after a company meets specific production and sales targets. Government startup funding is often used for proof of concept, prototype development, and initial market entry. The government should also enable faster SIDB and PSU bank lendings with tech enabled evaluation. These steps are critical as Indian startups are over equity dependent. In global ecosystems, startups use a healthy mix of venture debt plus guaranteed backed loans. Today, most Indian founders still rely only on VC money, which dilutes equity early. The impact of these policy changes would be lower equity dilution for founders as they will not pledge equity for funds, longer financial runway, and more capital for non glamorous but critical sectors like manufacturing and electronics. Strong domestic market access through government procurement and faster payments. The third biggest request for startups would be to mandate a fixed percentage of government procurement from startups or MSMEs until a predetermined stage, ensure 30 to 45-day payment cycles for startups supplying to government, and simplify GEM, tender norms, and compliance rules for DPIIT recognized startups. This ask stems from the fact that startups struggle not to build products but to get their first large, credible customer. Government can especially become a massive early adopter in edtech, health tech, AI, cybersecurity, and climate solutions. Also, earlier experience with some government projects point to slow payment cycles. Delayed payments kill cash flows faster than the competition does. The major impact of these requests would be faster product validation, stage early revenue for startups, and reduced dependence on VC funding for working capital. Second, weekly funding update. India startups raised US $171 million in November 24 to November 28, 2025. Between November 24 and 28, Indian startups raised approximately US $171.4 million across 20 funding deals. The uptick from the previous week signals a modest resurgence of investor interest, especially in early stage and mid stage ventures. The trend suggests that while mega rounds remained rare, investors are gradually returning to a steady cadence of investments in startups with viable business models. Management lessons. Capital is selective. Financing now favors startups with clarity of business model, sustainable growth, and unit economics over hype. Diversified startup portfolios, including early, mid, and growth stage deals, indicate a maturing funding ecosystem with room for balanced risk and opportunities. So that's where India's startup ecosystem stands right now. On one side, we see the government opening direct dialogue with founders at the highest level. And on the other, we see funding returning slowly but steadily with more discipline. If you're a management student, this is a perfect real world case of how policy, capital, and market access together shape entrepreneurship. And if you're a founder, these three policy asks, tax clarity, credit access, and government procurement, could literally decide survival or scale in the next few years. Let me know in the comments which of these three policy asks do you think will make the biggest difference for Indian startups? If you found this breakdown useful, don't forget to like, share, and subscribe for more weekly startup and business insights. See you in the next video, and until then, keep learning and keep thinking like a founder.